I would be pretty surprised if if the Democrats and Republicans managed to reach a deal before U.S. election in 2 weeks, just because I think both sides are quite apprehensive of giving a victory to the other side ahead of that election. In terms of how we're looking at portfolio allocation, we're basically saying don't make any huge changes to your portfolio allocations just because of U.S. elections. We have seen the odds of a Biden Democratic sweep increase since the presidential debate on September 29th. And that's certainly been reflected in ETF flows and sector flows in the U.S., particularly in the clean energy and infrastructure space, where we have seen Joe Biden quite extensively talk about a fiscal package in 2020 and 2021 and beyond, and $2 trillion of that potentially going to clean energy and infrastructure. So those have been two of the major areas where we've been seeing tailwinds. And global clean energy this year is up around 85%. So clearly, it's had a strong tailwind off of the back of this.
Right, but wouldn't that be a risky proposition to put all your eggs in one basket or ride that trade in anticipation of a Biden victory, especially now, there's much talk about how a contested vote could be quite difficult for the markets. I mean, we had Mark Mobius the other day talking about a dramatic fall if a contested vote was the reality we were staring at. I've seen trades build up in China also in anticipation of a Biden win. And so I wonder, how do you kind of hedge yourself to the downside if the markets were to turn?
Yeah, I mean, as I said, we're not advocating making any huge shifts to your portfolio just on the basis of who's going to win the presidency. I mean, clearly, a clean sweep by the Democrats would probably have the most longer-term impact. And, the way that we're sort of looking at it is to have a balanced portfolio. There are places to take risk. You mentioned China, certainly one of them. If Biden were to win a Democratic sweep, the view on U.S.-China relations is that they will continue to be relatively strained, but the communication method that comes out of a Biden presidency versus a Trump presidency, I think, would mute volatility, at least in terms of U.S.-China relations. On the back of that, probably emerging markets would be a beneficiary of such an outcome as well, with a weakening of the U.S. dollar with that huge fiscal package. So I think, initially the reaction from a status quo Trump presidency could be quite risk-on. The initial reaction of a clean sweep by the Democrats could be quite risk-off because of Biden's policy on raising corporate tax from 21 to 28%, and what that would mean for earnings growth in the U.S. next year and the dampening effect that would have. But I think as time goes on and we move into the end of the year, investors will start to realize that there is going to be a pretty large fiscal package that will come out of a Democratic presidency if he does win the Senate as well. So that might be risk on moving into the end of the year.